Good morning. This is Larry McMillan with a stock market update on Monday, November 13th. So the market did break out last week, on Friday. We closed above 4,400, and that's a very positive sign. The more positive sign would be for it to hold that level again today. It's struggling to attempt to do that. The reason we require a two-day breakout is there have been a few cases in the last couple of years where we had a one-day breakout and then it gave that back and we went into a fairly severe bearish phase. So I don't want to change into a core bullish position until this is confirmed. So the close today, again, above 4,400 or really 4401.60. would solidify this new buy signal. The McMillan volatility band buy signal that occurred a couple of weeks ago is still in place. That has a target right now of about 4460, but that's a moving target. That's the Bollinger Band, the +4 standard deviation modified Bollinger Band. Equity-only put-call ratios have come under some interesting light recently. There's some heavy arbitrage going on the CBOE, which is distorting the ratios because a lot of deeply in-the-money puts are trading. And this happens from time to time, but it has distorted our weighted ratio because these in-the-money puts are expensive and therefore a lot of dollars are flipping back and forth on the put side, making it look like, the market is still negative. The standard ratio is less subject to this, and so it's on a buy signal. As far as the equity only, we're going to have to just wait and see. Eventually, this arbitrage will stop because the in-the-moneyness of these stock options, such as Tesla, Zoom, and other big names that have dropped in price, eventually that will go away and there won't be those in-the-money options. But for right now, there is some distortion in the equity-only put-call ratios. Breadth gave sell signals after the big run-up 2 weeks ago, and then there was a pullback last week. That generated sell signals. And the breadth was only positive just on Friday. We'll see how it is today. So far, it's not doing well. So that's not really a great thing. If the market's going to break out to new relative highs above 4,400, you'd like to see breadth expanding. In fact, even getting overbought. And rather than giving sell signals, that's really not good at all. So we'll see how that situation resolves itself. On Friday, there were more than 100 new lows on the New York Stock Exchange, despite the fact the market was higher. That's another negative. If there's 100 new lows again today, which probably won't be, but if there are, then that's going to be a sell signal from this indicator. VIX dropped a lot last week and is now down near 14. So the spike peak buy signal that occurred in late October is still in effect for about another 10 days or so. And the trend of VIX is not on a signal at all right now. It would move to a buy signal if the 20-day moving average of VIX can fall below the 200-day moving average. That's not going to happen right away. Maybe a week or so out, we'll take another look at that. The constructive volatility derivatives just mean the term structure of the futures. That's bullish for stocks right now. So, the price of SPX has moved above 4,400. That's a big positive. After that, things start to get a little messy. We'll see if they can resolve themselves in the coming week or so. We are coming up towards Thanksgiving, and so after Thanksgiving is usually a somewhat bullish period, although not every year. Witness 2018, for example. So I encourage you to visit our website. Take a look at our daily letters here, because these things are changing quickly these days, and that's the only way to really keep on top of this. And meanwhile, have a great week trading.